Hi guys, this is Brian from financialtradingjournal.com, and this is episode 4 of my How I Trade Binary Options series, and this episode is about pattern formations. So, from episode 2, I taught you candlesticks. Episode 3, I taught you price action. And from those two, once you draw the lines, support lines, resistance lines, and trend lines, sometimes the byproduct of what you draw resembles patterns, and these patterns are recorded throughout history, and they always usually have a typical result that happens given the price action. So what I'm going to teach you in this video is how to recognize the patterns, or what patterns to recognize, and then show you what typically happens given the right price action, and given the wrong price action, what happens. And after learning these, don't go hunting for them. Just like in the candlesticks or price action videos I mentioned, don't go hunting for trades. Like, don't open your chart and go like, what patterns can I draw? No, don't bother. Just draw your lines the way you would normally draw them, and then they will appear on their own. Okay, you don't have to do anything. It's just a byproduct. It just happens. So for this episode, there's no strategies and no typical scenarios. I'm just simply going to go through all the different patterns, show you the results, what typically happens, and the counter example of those. And you have to use candlesticks and PA to distinguish whether or not the typical result will happen or not. Because let's say something is supposed to break out, but then there's a reversal and it doesn't break out instead. So you got to watch out for those things. And since you're betting on the support resistance levels or trend lines, it's better to wait for confirmation. That way you're safer in trades. And the general rule of thumb is the higher the time frame that you use, the longer it's going to last. Likewise, for shorter time frames, if you're using like a 1 minute chart and you draw a pattern, then it's only going to last so long, versus if you draw the pattern on a daily chart or hourly chart, it's going to last longer. So, couple precautions for these patterns is they may not always work out as planned. There are certain periods where they don't work at all. That's like during news release or lack of volume, like during holiday season, or pending news release, like NFP data days, employment data days, the big data days, those days where the markets aren't moving, they're just waiting for the numbers to come out. Once the numbers start rolling out, let's say that there's a pattern formation, you think something's going to happen, but then the news is going to go completely opposite, then obviously it's going to break the pattern. So it won't happen there. And like I said before, bottom line is you have to use PA to determine what happens next. You have to keep watching. You may expect something to happen, but you still need to watch for confirmation and see if it actually happens. And the other way to use these patterns is, let's say you just log on and the charts say breaking out in an uptrend right now, and you don't know why it's going up. If after you're drawing your lines you don't know what's going up, just go backwards and draw the lines for the period leading up to this current time chart, and then you'll maybe see like a pattern that leads to this result, and that's why it's trading like this right now. So yeah, that's all I have to say for the warnings and all that stuff. So you're basically in control, because depending on how you draw the line and how you perceive it, you may perceive something differently from someone else. So I'm going to start on the examples. There are a total of 21 charts. 21 charts, which has about 5 to 8 different patterns. Okay, so I don't know how long this video is going to be. Right now we're 40 minutes in. I'm assuming we're going to last up to at least 20 or 25 minutes, or faster if I speed through it. First pattern that I will be using or showing is the ascending triangle. Very popular formation. It's formed, you have an uptrend or an upward trend line and a resistance level. So the trend line is determined by higher lows. So you start off with a low here, higher low, higher low, higher low. Then you have an upward trend line, but it's still stuck with a resistance level. Then given the PA, it could either break out and go upwards, which is a typical result, or if the resistance is so strong, it might reverse and just break formation. And here's one example. This is the Australian USD on December 23rd, 2010, using the 1 minute chart in the morning. And we have, this is a bar chart. I wasn't using candlesticks when I started trading last year, so you see a low here, higher low, higher low, higher low. You draw the trend line, resistance, resistance. That's the ascending triangle. It breaks out. This bar closes above. That's your confirmation if you want, or you can wait for another bar. And this is the 1 minute chart, so it's going to be really fast paced. So you're going to look for like 1 or 2 bars confirmation, and then you enter for say the next 15 or 30 minutes or the next hour, depending on. And you'll see this one, it lasts. Or wait, this seems weird. I think this is the 5 minute chart, not the 1 minute. That was a typo. Okay, this is the 5 minute chart because there's 12 bars between each line, and each line represents an hour. So 30-minute mark is like there, and 15 minutes marks is there. So you could trade, it breaks on the hour, you trade the next bar, you get one win there, and you get another win at the 30-minute mark, then it starts going back down. See, the 1 minute ascending triangle lasts for 30 minutes. That's fine, it's a short time frame chart. Another example of the ascending triangle. Okay, this is what it is here, just for reference, so you know what it looks like. And the area I'm focusing on is that you have a low, another low, another low, higher lows. They're all going up. That forms your trend line. You have resistance here, here, and here. That forms the ascending triangle, and it breaks out here. So this one, the wick breaks above, but it still closes below. But this closes at the line, so you don't know what to do yet. To wait for the next one. The next one closes above. Oh, and I forgot to mention, this is USD Canadian dollar on the week of October 22nd. 15-minute chart. 15 minutes. Okay, so this is a higher time frame chart, and each bar is 15 minutes, which means if you're trading 15-minute expiries, you can count the number of green candles after this breakout to see how many you would win out of the total candles. So you wait for the confirmation, that's one. If you want to wait for the pullback, that's another one. That's a pin bar, that's a doji. The next one is another doji, followed by red, and then it gets choppy. So you would win one, at least one, right there, the big one. And then if you wait for a pullback, you could win the second one, and then I guess wait for a pullback again or confirmation on the trade. So you gotta watch PA. See, it starts getting choppy. These dojis here, followed by red, and then another green engulfing candles. You gotta watch the PA, see what happens. But you get at least one trade because 15 minutes, it. But if you're trading forex, it helps too because this whole thing is an uptrend. On to descending triangles. Descending is just opposite. You have lower highs forming a downward trend line, and you have support, which hasn't broken yet, but you have the downward momentum. So you're looking for a breakdown. I don't know what to call this. I'm just calling it breakdown, which is a typical result, breaking downwards, I guess, or reversal, and that's breaking formation. So here we have this downtrend, so you have a high, another high, 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 right? You can draw the trend line like that, and then up to this point, it didn't really reach low yet. So here's low, low, low. You draw a triangle there, descending triangle. It breaks out. This one closes below the line, below the support line. The red bar, I guess I just stopped the chart after this, but it does break downwards. So, and this is the did I mention the currency? Australian USD again during the last week of September 30-minute chart. I'm gonna try to remember to mention the currency pair before I start. So this is 30 minutes. So if you're trading 30-minute expiries, you would win 1, 2, 3. If you're trading 15-minute expiries, I'm hoping they're all green. Then they're all red. Then you can win 6. So this is a higher time frame chart. It's gonna last longer. I'm assuming it's probably gonna go down, then up, then continue going down. So you can play around with that. For each pattern, I will show 2 examples. Whether or not they're the same examples or whether or not they're failed examples, you'll see. So this is Euro GBP, Euro Pound. On August 31st, this is the 5-minute chart. Again, descending. So you have high, lower high there, and lower highs as you go down. So you're drawing a trend line like that. You have support like that. And this one, I guess the support was strong. The sellers couldn't break it below, so they didn't go, and this broke formation and reversed. Okay, so it goes both ways. This one didn't even come close to support this time. It just bounced. So as soon as it breaks the trend line, you start watching to see what happens. Typically what happens is it breaks, then it comes back down to touch the trend line, and then it goes up again. And then it goes up for, this is 5-minute chart, so this is up to 6 o'clock here. So for 6 hours it goes up, breaking formation. You can trade this, this becomes an upward channel. You trade that, and then whatever. This is not a pattern. That's from the last episode, PA, downward channel. Next pattern is a wedge. A wedge is also known as a pennant or a symmetrical triangle, and you just draw your trend lines. You draw, based on higher lows and lower highs. You draw the trend line, and eventually you're gonna see that they're not exactly straight or parallel. And they're actually diverging. It's forming a triangle shape, and that's why it's called a wedge. And these are neutral pattern formations. You're not expecting anything, whereas previously with ascending and descending triangles, you're expecting a continuation of the trend. Here is a neutral result. Either way could happen. It could either break down or break up. So the neutral results doesn't have to be straight. It can be tilted. It can be slanted. As long as it resembles a triangle, then it's a wedge. And that's why I hate these ones. You'll see why I hate it after I show the last example. But this is an example of a forecast. This is the Euro USD on May 25th 30-minute chart. Yeah, you can tell the dates at the bottom. So this formed from May 23rd, May 24th, May 25th, and I'm presuming it keeps going on for the next 2 days, and it just gets the symmetrical triangle formation. Eventually it's going to start breaking out. Hopefully. You hope that it breaks out in one direction. This is the Australian USD on March 27th last year, and this is the 5-minute chart. Again, there's a picture for reference, and here's what I drew. So we have high, lower high, keep going, lower highs, so that forms that trend line. Then we have lows, higher lows, higher lows. That's the lower trend line, so that's your wedge there, and it starts breaking up here, and then you have this upward momentum. That's one result, and it's neutral. You're not expecting anything. You're just waiting. These wedges are pure waiting games. Don't expect. You just watch the PA and you see what happens, and there you go. You follow direction. I'm doing more wedge examples because these are kind of tricky because they're neutral. So there's the example again. That's what it looks like. This is the Euro USD on May 30th 5-minute chart. And I'm just gonna zoom the picture out. Which one? So 5-minute chart. I drew this at 9 o'clock, 9 p.m. You have high. I guess you could just start there. You don't really have to start back there, but that's where the first point was, and lower, lower, lower. It keeps going. You know, you can stretch it out like that. And this one, if you stretch it out, that one won't really hit, so it won't matter. So you have low, low, low. You draw the trend lines, and it took until this is 5 o'clock the next day. So this took 19 hours for the symmetrical triangle to play out, and then finally it breaks out. As soon as it gets close like this, you can tell it's going to start breaking out soon. So this is again a neutral pattern formation. You can watch it, watch PA. Eventually it's going to start breaking out. Even if you walk away, let's say you walk away here, you come back say like 2 hours later, and then 2 hours later it's over here, it broke out, so you're like, okay, it's up. Then you start watching, is it continuing or what happens, and then you trade it. And the last wedge example is why I hate these damn things. This is what can happen. You think it might break out this way or that way, but it might just go straight and start ranging and form a funnel shape thing instead of an actual direction. This is why I hate these. So this happens most of the time. Very rarely does it actually break out. So I'm going to zoom out again. So you can tell there's a high there, lower high, a low here, and a low there. So then you connect the lines, connect the dots. Technically you could keep going, but starting around here, it just goes straight. So if it was a good one, then it should have, you know, went back up there like that, like that, like that. But this one stopped right there, and it just kept going inside this range. Then that breaks the formation, and you're not looking at that anymore. You're looking at a ranging market, and then you try to see when it breaks out, or you just trade the range. On to the next formation. And it's now 18 minutes into the thing, into the video. This is Euro USD September 14th 5-minute chart. And this is a bullish flag. And these are continuation pattern formations. You're going to have a flagpole, which is formed by an uptrend. You know how to draw that from episode 3. Then, since it's an uptrend, it's going to start consolidating with a downtrend, and this forms the flag. After consolidation, it can do one of two things: either continue its upward momentum, that's the typical result, or it's going to start reversing, which is breaking formation. So this is the 5-minute chart. There are multiple ways you could draw this. To see, it's not exactly to shape, but basically here's the flagpole. There's the first flag. It consolidates for a while, then it breaks up again, then it consolidates for a long while. You know, this is a short break, then it comes back up. You gotta watch PA for that. Don't get suckered into that. If it breaks, usually if you have a big long bar, you usually wait for the next one to see what happens, because if it could just be like a price spread on the last trade, then it jumps a couple pips, then it comes back down. So anyways, get back inside, and then it goes up again. So these are flags. They should resemble, this is what a flag looks like. Some of them may not be exactly proportional, and you might get this, but it's a flag nonetheless. And these are continuation trades. Another example of the bullish flag, and there it is again. For example, this is the USD Canadian dollar on during the last week of September, and this is the 30-minute chart. 30 minutes, so we're talking big time frames. And this is, note, there's an uptrend, the red line uptrend. So on the 30-minute chart, uptrends are healthy when there are pullbacks, as I mentioned with the somewhere in episode 2 or 3. With pullbacks is consolidation. It's for you need that for a healthy run. So you may see these flags forming in your uptrend, because if you think about it, this is a flag, and then it goes back up, and then this is another flag, and then it goes back up, and then it forms a bigger flag, and then it keeps going. So you have a flagpole here like that. First flag consolidates for, so these are 30-minute charts, so this is about half a day. These dotted lines represents the day, so this is about half a day. Then it goes up for the other half, then it consolidates again, and this lasts for almost 3/4 of a day. Then it goes up, and I guess consolidation again, and then it goes up, and I stop the chart. But don't expect flag after flag after flag for, like, say 10 flags. That's a big uptrend, and that usually doesn't happen unless, say, I don't know, just make up some example of a big news release, like, I don't know, like the US declares bankruptcy. I don't know. Think of something big. Then it would just go straight down and keep going, because it's never gonna stop. You know, if something big drastic happened, then that could happen. But during a normal trading session, like this is during September, you can't expect this to last forever. Eventually it's gonna go back down. So I did bullish flags. Now this is a bearish flag, Euro USD. These are 4-hour charts, and this is from July to October. And here's a big one. So it went down for each of these dotted lines represents 1 week. So it went down. The flagpole formed for 2 weeks, then it consolidated for 1 week, and then it went back down. So this is a 4-hour chart. Remember, keep that in mind. So that's why the resulting result lasts for a whole week. So keep that in mind when you're using time frames. The higher the time frame, the longer it's gonna last. And we're only halfway through the patterns, and it's already 23 minutes into this video. Another bearish flag. This is Euro USD May to July, and again 4-hour chart. Flag, consolidation, flag, consolidation, and then it goes down, and that's it. Then it starts reversing. So, and this already is 3.5 weeks long. So, and this is a flagpole. So I guess you could stop here. That would be from there to here. That's 2.5 weeks already for 2 flags. Next example, double tops. Double tops usually are used for reversals. You have, say, an uptrend, then it starts to range a little bit, and so this is support based on this high here. Then it goes back up to test resistance. It can either A, break resistance and hence breaking formation and gonna continue up, or it can bounce back down and break support, and then it's a reversal, which is your typical result. So this is the Euro Pound July to August 4-hour chart. So it's going up, right? So up, then go down, then up again, and then down. 4-hour chart. So this is the resistance before, which becomes the support. There's your double top. They don't have to be side by side. It could look like that. Technically, if you want to do it, this looks like a descending triangle. These patterns just fit together by themselves. So that's the double top reversal formation, and then it breaks downwards that way. This is a double top example again, reversal. That's what it looks like, and just to show that it doesn't have to always look the way it looks. So this is a part of the uptrend. This is Euro USD September 23rd 5-minute chart. Resistance, let's just draw that support line up. This is an upward, then it bounces down to there, breaks. We'll just ignore that. And then this is the top resistance, and then it goes back down. I'm guessing some news came out there. Maybe, if you were watching this, maybe this could be a news release in the circled area, and that caused it to go back outside the channel. Once it starts ranging back inside, test the resistance, can't break it, and then it comes back down. And you see all this consecutive red candles. That's good. You can trade about, you trade 15 or 30-minute expiries. You can trade this is 5 minutes, so every 3 or 6 bars, that's one expiry. So 1, 2, 3, 4, 5, 5 wins right there. Breakout or breakdown. 26 minutes. Wow. Okay, double bottom, the reverse or inverted of the double top. Same thing, you're going down. This is support, which later becomes resistance, as I mentioned in episode 3. Once it breaks support, it becomes resistance on the way up. So it ranges again, then it either reverses, that's the typical result, or it breaks down, which is continuation. And I'm going to zoom out again. So this is going down, then back up, then down, and it goes like that. Not that great of an example. It's kind of hard to find pattern formations. That's why not many people use it. That's why it's a byproduct. You're not using this as your main tools. You're using candlesticks and price action. This is just complementary. So technically double bottom, 5-minute chart. This is the Australian USD on September 25th 5-minute chart. I don't know why I zoomed in so much, but double bottom, you could use this as PA. This is a support level, and it bounced. This is double bottom again. So that's what it looks like, and I'm picking this one. That's the bottom. Goes down, bounces up, goes down, and breaks. So these were all resistance levels from before, and that's another resistance level there. And this is support. It bounced on support and broke resistance and broke out for quite a while. And this is the 5-minute chart, so you can trade again every three bars. So 1, 2, 3, then it consolidates. You could either wait for the pullback or either trade that or skip that. So skip that. So then another 3. So 1, 2, 3, 4, 5. 5 trades again. Seems pretty easy. Now for the tricky ones. This is bearish Gartley, which is a reversal. And I'm teaching this after the double bottom because this resembles a double bottom. So, but basically, unlike what this is slightly more complicated than double bottom. Double bottom is just 2 bottoms. It doesn't. There's no you don't have to account for the support resistance level here. You just typically just use it, and it looks like a W. So here it is right here. It goes down, bounces back up, down, up, and then you can connect the lines like that. Some people also call this a butterfly formation because it looks like a butterfly. There you go. And then That's your breakdown. That's your reversal, which is a typical result. Butterfly formation. This is the USD Canadian dollar September 22nd 1 minute chart. And this is just to show that the bearish garter doesn't always have to be on a flat surface. It could be on, as long as it looks like a W, basically. Draw it like that. That's the first wing. Second wing is like that. And there's your butterfly, which is flying away. And before it can fly away, it starts tanking. And this is a 1 minute chart, so that actually takes a long time to set up for quite a short amount of trading. It's good for 60 seconds if you can see it coming and look, there's a downtrend. But these aren't consecutive candles, so that's not really a good trading period. Just for the purpose of completeness, this is what a bullish garter, a bullish garter looks like. It's just flipped, so you have it looking like an M instead of a W, and typical result is it reverses up. Last three, and then we're almost done. 31 minutes already. This is even more complicated than the other one. This took me about, I tried to find a chart for you guys. You may or may not be happy with the charts, but it took me about 30 minutes to look through to see how exactly if it's forming or not. So you have an uptrend, then it forms the left shoulder, comes down on support, bounces up to form a head, then it bounces up near the left shoulder again to form a right shoulder, and then it typically breaks the neckline, which is your support level, and it reverses down. That's your typical result, or it can also continuation of this uptrend and it goes back up. So here it is. This is the July 4th Euro USD 1 minute chart. You have left shoulder. This is a 1 minute chart, remember. There's the head. There's the shoulder, which is slightly lower. I drew that too much. And then it breaks down. So your neckline is like that, and then it breaks down. And then it consolidates some more. Here's a bearish flag. Right, and then it breaks down. So you can combine patterns. That's the funny thing with patterns. You can combine them. You don't have to use one, and then as soon as it breaks out, you forms another one. Then this is a downtrend, or if you want to get to PA, this is a downward channel. You know, it's just everything is combined at this point. This is when head and shoulder fails. So you have left shoulder, then you have a head, then you have right shoulder. See, this is the neckline, and then it just goes that way. It should at this point start breaking down, but it didn't, and this is when it fails. This is when you have to watch PA. See, right when it closes at the neckline, there's a green bar for reversal, and then it goes that way. And this is a February 1st last year Australian USD 5 minute chart. So you're probably waiting for this confirmation. Then it tests again, and then it goes back up. You know, depending on how long. When you notice these patterns, you know it's best to wait for confirmation. You tend to wait quite a while, and then after a certain while, you start trading again. And this is an inverted head and shoulder. It's just upside down. Same thing, upside down. So you have here, you have a left shoulder, then you have a head, then you have a right shoulder, and here's your neckline like that, and then it breaks up. And look at that strong upward momentum, all these big green bars, and it breaks up strong. And that's using candlesticks. And then I close the charts after this, but this is forming an uptrend. So that's it. That's 21 examples, and we're now 35 minutes into the chart. Just a couple more things and then I'm done. If you need more examples, which you can find them, I do the Forex weekly analysis every Saturday for the upcoming weeks, and I started doing this in July till December last year. I'll start doing them again either this Saturday or next Saturday based on what I can draw on the charts. So you can check those out for more examples on support resistance levels or trend lines or pattern formations. And final notes. When you keep this in mind when you're trading these patterns, what you see may not be what you get. You know, typically when you go to the store, you pay for something, you know, what you see is what you get, right? You know, not here with patterns. You're not always going to get a typical result. You may get the reversal or breaking formation result and nothing actually happens. So up to here, from episode 2, 3, and 4, you should now have plenty of information to help you trade binary options. Candlesticks will help you gauge if it's going to break out or not, closing, you know, reversals. Price action is for spotting support resistance levels and trend lines. Patterns will be a byproduct of the first two. But the key thing to remember is watch PA and be patient. So again, if you have your own broker, then use them. If you don't have one, I recommend 24 options. And they just told me today they raised their trade limit up to $15,000 a trade. So for all you high rollers who can risk $15,000 for a 15-minute expiry, then trade options your way to go, because most of the other brokers only limit up to about what, 2,500, 5,000 or something. 15,000 for a trade is a lot. But yeah, anyway, so I provided links to 24 options below and to my blog and Twitter. Hope you guys enjoyed this video. This is now 37 minutes long. Thank you for sitting through this. Hope you enjoyed it. See you guys next time.